There's a name I've been back and forth with probably over the past 5-6 years. I think I told you to short it at the right time. Not short it, but just avoid it. It was super expensive. Earnings weren't growing. Now, post-COVID, I mean, this is a company, they blew out the numbers today. Easily beating earnings per shares, easily beating sales estimates. Same store sales surged 12.6%. It's a number that you're not going to see. By, again, same store sales is a key metric for restaurants. It's a key metric. Just measures stores opened, right? Comparable stores open to the period last year, right? A year ago for over a year. So they're not new stores. They're open for a year. And sales for those are up 12.6%. It's a very important gauge that people look at also in restaurants and retailers, retail operations and stores. Operating margins were just over 15% for the quarter, which management was pissed off at. Right? They said they're not happy, blaming elevated commodities, wages, while higher energy costs. Again, these are headwinds that hurt the number. But 15% operating margin. It's amazing when considering GM just reported. They reported great numbers. I just think there's a big separation between GM and Ford. We did get rid of that company a little bit earlier. I wish we would have held it since it's up like 7% today. But if you're looking at Ford and GM just reported, I think Ford reports very soon, they have operating margins of 5 to 6%. Now, you might say, Frank, you talk about two different industries. You're talking about, autos, and you're talking about McDonald's. These are blue chip stocks that you have to look at. They're different industries. But you need to remember something, because those operating margins for Ford and GM at 5 or 6%, they're likely going to get worse. Why? Because they're being forced to lower prices to compete with Tesla. And even said that. So you may be thinking, well, it's not apple to apple necessarily, but higher profits for every company leads to stronger balance sheets. That allows you to invest more money into your business, to grow it, advertise, whatever, hire more people, build more stores, build more cars. Allows you to buy back stock, increase your dividend, which the oil companies do, right? But which Ford and GM, although those numbers were great, again, for GM this morning, they're going to have trouble doing through 2023 and likely well into 2024 because of the competition and because they're lowering prices while already having very, very low operating margins. So in the surface, you could be like, wow, those numbers are really good. But, when you look year over year, not so much sometimes. And we're looking at numbers that beat analysts' expectations, right? Doesn't mean that the companies grew year over year. They just beat the number that they're putting on TV, which has been drastically lowered into the call, which is, something that's going to come back and bite everyone on the ass pretty soon for most companies. But when I look at McDonald's, what do they have? They have incredible pricing power. Now, I gained about 10, 12 pounds and been eating fast food a lot. I plan to go on a diet, but the reason why is because now that we close on our house, we're going back and forth a lot. We're still driving the kids back and forth. We still have a little bit more work to do before we officially move, which is going to be 3 weeks. And just, it's crazy, right? It's the most stressful time in my life right now, just back and forth to the house, taking the kids back and forth. My wife's doing the school. And also, again, almost 4 or 5 times a week, it's about 50 minutes away. We're going back and forth to the house, dropping stuff off and just doing things and meeting vendors. I still have to complete a couple of projects. So we've been eating a lot of fast food, unfortunately. And I don't know if that's you, and hopefully it's not, because that's going to stop pretty soon, because now, again, about 2 to 3 weeks, I'm officially moving into my new house in Jacksonville. I paid over $14 for a Subway sandwich with a medium Coke and chips. I'm paying $15 for a meal and a drink at Chipotle. If you're looking at some of the prices that are being charged, and just in Starbucks and how much, and even Zaxby's and all these places, get salads there and stuff like that. It used to be $7. They're $12 now. It comes down to the amount of money, especially for a family, of what you're paying is insane. Food prices are out of control right now. And I'm not just talking about eggs and all that shit, whatever. I'm just talking about just across the board. Holy cow, they have not come down. You're not saying like, wow, thank God. There's no family out there right now saying, wow, inflation is eased. I see it. I'm not paying as much. No, you're paying even everybody's bills are still going a little bit higher, just at a slower pace. But they've already moved up, 20, 30% over the past 2 years. And you're still paying these massively high prices that are not going down, right? So even though you might say, well, inflation might get down to 3%, 4%, 2% target, whatever, the Fed target, you're still paying a ton of more money for almost every single bill, every bill. You can't tell me your cable bill's going down. Don't tell me your streaming bills are going down, because they're already trying to raise prices. Your electricity bills aren't going down. Are you crazy? If you go to the supermarket, go there. You have to buy off-label brands. The only way your price is going down, they're not going down, right? You're not going down. Gasoline prices are up, right? Heating oil. You're just looking across the board going, holy shit. Now, if you look at McDonald's, you could get a breakfast there, buy one sandwich, get another one for $1 for $5, right? Put that in perspective. Our local bagel store charged me $27 for 4 bagels. 2 of them had egg and cheese. 2 of them had cream cheese for my kids. $27. Are you effing kidding me? This is a local. It's not like, wow, this is the best bagel. It's not New York bagels or anything. It's just the best in an area in Florida, which makes it like, still a shitty place, but just better than every place in Florida because most, bagels and stuff like that and pizza is going to be bad in Florida. It's not New York, it's not Chicago, whatever. But prices are insane right now. People are trading down. At McDonald's, those prices are so cheap, they can raise prices considerably, which they've done, and still be much cheaper than so many of the other fast food places because of their supply agreements and supply chain and stuff like that. Now, the stock fell, even though they reported amazing earnings, because management warned, like they're supposed to do, which is smart, said, listen, 2023 earnings could see some pressure due to higher commodity costs, right? Amazing, due to higher commodity costs. I thought inflation was coming down. They're warning of higher commodity costs for 2023, something that's interesting, which a lot of companies talked about. They also said they're still dealing with supply chain issues and weaker consumer demand could happen, right? Because, they see more than anyone that a recession could be coming, but that's going to be good for this company since it's going to result in more people going to McDonald's to eat. And plus they have pricing power, right? So I know that management's being conservative with their future guidance, but that hurt the stock a little bit. I'd be buying here. And they're aggressively opening stores, 2,000 around the globe. Stock's trading about 21 times next year earnings. And you might say, well, it's kind of expensive. I mean, there's NASDAQ companies trading at 27 times forward earnings and not growing their earnings like, maybe by 2-3%. Some of them maybe. Some of them are seeing earnings decline year over year. But McDonald's is projected to grow their earnings by at least 10% annually over the next few years. That's what they project. It's probably going to be much, much higher than that. So you have a company where, again, you don't want to look at a PE and be like, wow, that's an expensive company, because it's not expensive if the company is able to grow earnings. And they're going to grow those earnings probably about 3 times faster than every company in S&P 500. And it's a company that has pricing power in a world where a lot of companies are starting to lose pricing power. We're seeing it. We're seeing autos lose pricing power. We're seeing streaming companies lose pricing power, right? You used to be able to raise prices and raise prices. We're seeing some restaurants. We're seeing retailers. That's why inventory levels are going higher and higher, because they can't sell them for higher prices. They got to lower those prices. So we're seeing a lot of companies, not all of them. We're seeing it across definitely semiconductors, but they're losing pricing power. McDonald's isn't losing pricing power. Going to grow earnings much faster than the overall market. Plus stock pays around a 2.5% dividend. It's a really good name here. It's a good name staple that I think should be in everyone's portfolio. Just like Exxon. Again, nice dividend paying stock. Just like a buy and hold name. It's very, very attractive, especially on this pullback. And don't take a full position because the market's going to be all over the place. But there are names in this market that are getting it done, that are doing it right, even though I predicted the market's going to come down a lot. At least a lot of stocks are going to come down a lot because their earnings are not just going to be able to hold up. There's companies right now that are meeting estimates, lowering future estimates, and going higher, which kind of amazes me. Or companies that are beating their estimates, but yet earnings are down 10% year over year because they've been revised 10, 12% lower heading into this quarter. So there's a massive discrepancy in what the earnings are supposed to be or what the analysts are projecting, which is around 220-ish, compared to where earnings are likely going to be, which is probably below 200, 190. And that's not being factored in